Hey traders, Raghee here. Welcome to another episode of Charts and Coffee. Hope everyone's doing well. Happy Thursday, everybody. All right, so let's get to it. Got a lot of questions already queued up. So just a quick heads up before we get there. Just keep an eye on the calendar. We've already had the Philly Fed manufacturing and unemployment claims. Unemployment claims haven't been a big mover, but you will see some volatility typically after 8:30. Remember, we are generally in sort of the rabbit hole market of where we are in terms of good data and bad data. And generally speaking, we are in the environment where disappointing or bad data is good. So case in point, unemployment claims were a little bit less, still pretty high, but a little bit less than expected. I wouldn't call this good. I wouldn't call it bad. But the idea is after 8:30, the market gets to make some decisions about whether or not this keeps the Federal Reserve on the current trajectory of asset purchases, on the current, in other words, how far are we from the first taper and from eventual rate hikes. And the more the data suggests the Federal Reserve should hold their current monetary policy path and instead of tapering purchases, instead of even discussing rate hikes, the happier stonks are going to be. So you'll see equities really start to move higher since 8:30 this morning Eastern. All right, so let's get to it. First question here is, which time frames do I find most useful in futures trading? Elle, if you would have asked me this 5 years ago, I would have shown you a layout of a 5 minute, 15, 30, 60, 120, 240, 480 daily, weekly. I mean, I would be scanning across short and long-term time frames. And I probably did that for the first 20 years of my career. And then about 2 decades in, I don't know what happened, but I got tired of doing it. And I found it to be really having to jump through two hoops. One is, what am I going to trade? And two is, which time frame? 30 versus 60, 60 versus 120, 120 versus 5. And I just found it to be absolute nonsense. So I don't know. I guess I got wise after 20 and said, look, I'm either focused on one short-term time frame or one long-term. So if you're asking me what I use to longer-term trend follow, what I'll consider mostly swing trading, days to weeks, daily time frame. If I'm going to day trade, you pick one time frame that's 5 minutes or less. So 5, 3, 2, 1. It almost doesn't matter. But what I would say, and this has made my life infinitely more simple, and with that much more effective in my trading, pick one long term. Doesn't matter what it is. Pick one short term. Again, it doesn't matter what it is, but separate your two time frames and therefore your two time horizons, and you will find effectiveness in that simplicity. So for me, it's typically a one and a daily. That's it. Nothing in the middle anymore. All right. Thanks for the question. Let's see. Next up, what do I think about an entry in? I'm going to just pick one of those. I'll take CAT. All right. So what do I think about an entry in CAT? Look, I think if we want to look at Caterpillar, and this would apply to your question about love as well. One, we want to find a double green, right? We want to find not just a market that has an uptrend of its own. We want to find a market that is in an uptrend. So boats and tide. If you've been listening to any of my free videos, I would highly recommend checking out yesterday's free video in the Simpler Trading YouTube channel, where I talked about, actually really in-depth discussion about what the heck does it mean to buy a dip. And I got into a lot of detail. I think a lot of you will benefit much from 6 or 7 minutes of that video. So if CAT is in a narrative that I like, then I like CAT. I might even like the larger narrative. So I want to find double greens. I want to find double greens that are trading in double green sectors or industries, preferably even the index, although at the index level, it's been difficult to find that kind of clarity. And if I can find the combination, again, the video yesterday, the free video, not even the premium video, the free video yesterday in the Simpler Trading YouTube channel, check it out. you're going to find that's going to be likely one you will refer to often. So I would highly check that one out. And you can find that at the Simpler Trading YouTube channel. All right, next up is GDL, sorry, GLD or GDX or something else, which I prefer. Look, gold is moving, and that's great. The 1, 2, 3 that was in gold, this was also a topic that had quite a few free videos dedicated to it. And the 1, 2, 3 broke out. More importantly, the 1, 2, 3 in the 30-year broke out. And so once that broke, and it doesn't need to keep moving, although it would have been great. But once that broke, the bottoming formation was complete. This is a good old-fashioned Dow 1, 2, 3. For those of you that are not familiar with the pattern. 1, 2, 3, breakout. And then once that happens, we're looking for higher highs. That's really the case. Even if the market pulls back, we're still looking for higher highs. The next hurdle this market overcame, specifically GLD, is the 200 exponential moving average. And then the next thing that it was able to do on May 7 was take out the 200 and then turn into a double green uptrend, which meant the structure of the 8/13/21, which had gone bullish as early as April 15, now accompanied an uptrending 34 EMA. So once all that happens, you'll notice it's one thing after the other. Well, then we can talk about GDX. So until I have a read on the underlying commodity, whether it's oil and oil stocks, whether it's gold and gold stocks, I'll get the commodity direction clarified, and then we'll go from there. And quite frankly, it's no different than playing copper, which has been for months now a far better outperformer than gold. It doesn't have to be one versus the other, but please remember that if you're looking at metals, please don't limit your metal scanning to the precious metals. Don't limit it to what's gold and silver doing, because quite frankly, had I been doing that, I would have missed what has been a very nice move in copper, what's been a really nice move in steel stocks, different kinds of metal, the non-precious variety. So just a little PSA there. But ultimately, what we have is gold finally having turned into an uptrend, pullback buys are valid, and then relatedly, pullback buys in the miners are valid as well. So thanks for the question. And if you like this kind of analysis, if you're finding it resonates, if you're finding the topics that I've been talking about in the free videos and here in Charts and Coffee are leading you to making better trading decisions, come check out what we're doing in the Sector Secrets Mastery, because it's this times 10. My full sector scanning, stock, alerts, spreadsheet, everything. And I think if you're finding, I want to know how to play copper, not now, but 3 months ago. I want to know what a 1, 2, 3 looks like and take advantage of that. Things like that, you're going to love what we're doing there. We have a great group of members who are super supportive in the chat, and they're always scanning together, looking for the same types of setups that are in line with our Sector Secrets approach. So do check that out. All right, next up is where can I get the JT indicator? I make that available for members, JMO. That's something that we keep in the room drives for Sector Secrets, and it's free to members, but it is something that I've reserved for members. Next up is, do I like soybeans after the pullback yesterday? I love the question. So ZS and frankly ZC and even soybean oil, which I've got to mention is the relative outperformer amongst all the grains. They all look great on the pullbacks. Soybeans, absolutely. That's going to complement an already long position that we have in corn. And then even looking at soybean oil, ZL, I would keep an eye on corn, beans, and bean oil. You notice the bean oil structure, parabolic, moving down into the 1321 zone, on a very nice uptrend. And so that is definitely something that I like a lot. The structure, frankly, is actually better than even corn. And now that it has pulled back, and you'll see it's still a little weak. It's still a little weak. So there's still an opportunity to pick this up somewhere between probably 1540 and 1535. So I do like it. Yes, absolutely. Anthony, do I mind sharing how I spotted trend stop working if and when rotation goes back from DIA to QQQ? So Anthony, I would say I would be very cautious assuming that industrials are going to slow down. They might correct, but I would still bet on industrials to the long side. But like any trend that isn't reversed or broken by Federal Reserve shifts in policy, because those are sudden, they're abrupt. We've seen them twice, once in 19 Q1, once in 20 Q1. But for the most part, they're going to do sort of what's happening now, which is we're going to lose the double green. We're going to go to yellow. We're going to see more blue grab candles. We're going to see a little bit more range bound action. The support of the 34 EMA wave might start to wane. And then we don't want to assume it's going to go from Dow to NASDAQ. It might be a little bit more granular than that. It might be industrials to semiconductors, or it might be, there's so many combinations. So the best way to understand rotation is, I like a Ferris wheel analogy. What's at the top of the Ferris wheel now? What's at the bottom? So not only will tracking laggards help you understand that, it's really it's a necessity to understanding rotation, because it's oftentimes going to go to those places that look like bargains. It's not that different than what happened to energies and financials late 2020, where through summer, financials and energies did not benefit from the buy everything market. It really wasn't buy everything. There were certain markets that were left behind, and those were two of them. And then lo and behold, when the rotation began, where did the market go bargain hunting? Exactly what was left behind during the parabolic run of the middle of last year. So that's the way you want to look at it. It may not be from a broad index to another broad index. It might be industry to industry. It might be sector to industry. That's where you got to look at who's underperforming. Now, clearly, and I agree, if we're going to see any kind of rotation, it's probably going to be in some sort of tech. So you're looking at the right spot for sure. All right, next up is, am I still trading spot Forex? Vaughn? Yes, I am still trading spot Forex. I've been trading spot Forex since late 99, 2000. And while my activity in it will come and go, depending upon central bank action and the trends in those markets, absolutely. It's still the best way. It will always be the best way to trade currencies. We have viable alternatives in futures. We have some alternatives in ETFs, but the best way to trade currencies is absolutely going to be the Forex. Always will be. I will say this because I never and always get you in trouble. There will never be a day that futures currencies will supplant Forex. It's just not going to happen. But the futures do give a lot of traders who prefer an on-exchange product, which is great. That's fine. If you want an on-exchange product to trade currencies, that's definitely going to be your preference, and that's cool. Let's see what else we have here. Let me get down the list. Oh, I lost my place. End of June seasonality. Market shows a decline. Thoughts for this year? It's a tendency. That's it. Do I look at seasonalities? Yes. Remember this. Are seasonalities a setup? Negative Ghost Rider. They are not setups. They are tendencies for how the market may behave. It might be something that the market's done repetitively over the past 10 or 20 years, but every year and every season does have its own characteristics. And typically that's going to be going back to, what are the Fed communications during the latter or middle part of the summer? What is the conversation about jobs? What is the conversation about inflation? So the thing that seasonalities tend to, and they can't account for, is the specifics of the environment we're dealing with now. What are those hot button issues? So tendencies are there. And if we line up the current price action and messaging from the Fed with the tendency, voila, you've got a really good roadmap. But I would never say that seasonals are setups. They're very much tendencies that we should watch, though, to your point. So while there's this sell May and go away type messaging, I'm not going to sell in May and go away. It's just one of the dumbest things that traders continue to think is a setup. It's just dumb. If the Federal Reserve decides that they're going to tackle bond traders head on, and they're going to have a cohesive message about the tools that they have, the continued asset purchases. If we continue to see the money supply tick up month after month, if we continue to see the asset purchases tick up month after month, and the bond market, which is probably right, but early in what the Fed is ultimately going to do. As Stan Druckenmiller has said, the only macro truly that matters is the world as the Fed paints it. It doesn't matter that we know that inflation's ticking up. Hello. But it only matters that the Fed thinks they want to, overshoot it, that they think it's transitory. Yes, we're being gaslit by the Fed, but the market's always been under, in that environment. So whatever the Fed paints, that's going to be the near-term picture. Bonds will probably paint a picture further down the road, but that doesn't mean it's tradable, if that makes sense. All right, next up is I would like to have an opportunity to follow your futures trades. Head on over to simplerfutures.com or simplertrading.com futures, and you can check out a trial and join us for, I think it's a week, and come see what we do. For sure, we invite you I think you'd enjoy the heck out of it. Come on over, see what we're doing, and you'll get a lot of this analysis, premium video analysis, live chat analysis. You will definitely benefit from the access to the Learning Center, previous member webinars. It's an immersion. It's an immersion, both educationally and from the standpoint of trading ideas. Okay, what do I think about Snap? I'll be frank, I haven't thought about it at all. However, why have I not? It's because it's in chop. Of all the things I could look at, A, I could care less about Snapchat. B, in a market that, generally speaking, I can find double green trends without having to look too hard. This is simply just not going to end up on my radar. Now, having said that, if it is on somebody's radar, I would keep an eye on the previous low. I would keep an eye on the 200 exponential moving average. And we're basically gravitating to an interesting little volume ledge here around 52 and a half, 50, we'll call it $52 to $53. Nice little volume ledge right there. So if we're going to see an oversold bounce between the 200 exponential and the previous low, and this volume ledge probably would be a pretty good spot that buyers would think that they've got an edge in possibly a bounce. I wouldn't call this a resumption of the uptrend. No, it's way too premature, but it could be a bounce from this level. So thank you, Daniel, for the question. A lot of times, when you guys have questions and I haven't looked at it, sometimes I'll say, wow, I probably should have looked at it. I don't know that I'd count Snap in that, but sometimes you guys will alert me to things that I haven't looked at in a while, and they're looking ripe, possibly ready to eat. Not yet though. Pogster, thank you. Yes, that dip video was a little bit longer, but I hope you guys make some time to go check it out. 6 or 7 minutes. Thank you. I really appreciate it. NEM. We were just talking about NEM the other day when we were talking about SLX. And one of the things that I was mentioning to my futures traders was that while we don't have steel futures to be able to capitalize on, and while I have a limited number of metals that will benefit from reflation, not precious metals, but your coppers and your palladiums and your steel, uranium, there are certain metals that are not tethered to the real yield narrative as gold is. So gold is much more tethered to bond rates and inflation. And silver is going to follow gold, and somehow, it's also occasionally going to follow copper, but somehow it's stuck in the middle. Not usually my preference. If it's tracking with gold, silver is an easy play. But then that again puts it back in the real yield camp. So what is in the reflation camp? What is in this macroeconomic environment? That's the stuff things are made of, right? Your coppers, your steels, uranium. And so with that in mind, NEM is really a great market to look at within the context of the metals and mining. But I think that, open up SLX, take a look at the stocks within it. We did this in the premium video the other night. So we've been on steel this week. That's been a conversation we've been having with the pullback. And so NEM is more, I don't know that I would consider that more towards a gold mining type type stock, but it is weighted in SLX. So, but scan SLX, and you'll find there's a lot of other names that I think are more interesting and more steel than gold. Doesn't mean that I don't like gold miners. I just really like steel better right now. Okay, let's see. What kind of trades do I do in Sector Secrets? And you emailed. Please know that I have literally probably dozens and dozens of emails every day. So, and I'll be straight up. I prioritize member questions, and then inquiries about what we do. You can check out simpletrading.com/sector. What kind of trades do I do? It's a great question. The kind of trades that I put on are overnight trades using options in ETFs and stocks based on a lot of what we talk about here, sector index, index sector stock. So we look at the broader index, then we might look at the sector industry, ETF, and then individual stocks. So it's a mix of trend following, that methodology, straight up. It's exactly what we talk about very often here in Charts and Coffee. So like I said, if this kind of analysis resonates, then you're really going to find what I do in Sector Secrets, just the full portfolio of the names that I put on. So I appreciate the question. Yeah, and if anyone ever emails me, please be patient. I get to them as I can. So I appreciate the inquiry. All right, gang. With that with that in mind, thank you so much for your time. As always, I'm going to head on over to the futures room right now, and we're going to go ahead and trade the open. First 2 hours of my trading life every day are focused towards intraday trading. And then I switch on over, flip the switch on the Sector Secrets type approach. And then the latter half of the day is more geared towards trend following, index breakdown, sector breakdown, stock search, scanning for those end of day trend following trades. So again, thanks. I'll see you tomorrow, same time, same station. Thanks for being part of the Charts and Coffee crew. Appreciate the time. Be good to each other. I'll talk to you tomorrow.